Good morning, everybody, and welcome back to another Crypto Warehouse show. My name is Mike. We come to you every day at 11 o'clock Central European time. No idea what time that is wherever you are, but we try and stream at the same time every day. We'll be live tomorrow at 11 o'clock. Friday, Saturday, Sundays we have off, but most of the time we're here at 11 o'clock. So make sure to bookmark us, follow us, subscribe. Whatever buttons you've got, press them before you leave today. Today, we have another packed show. We've got some more X-Files for you. We're going to take a look at what Arthur Hayes has got to say about ETFs. ADA has been called useless. I cannot wait to get into that article. USDC and Link are teaming up. We're going to go. And there are 14,000 dead coins. So we're going to go over that as well and see what we think. Overall, we are pretty much back where we started from yesterday. I don't know if you remember, we were talking about trying to get Bitcoin above 43,000, try and get us towards 44,000 yesterday. We did have a run up, and we are going to go through that when we go through Bitcoin. The charts we're going to look at today, we're going to look at Link, we're going to look at ADA, and we're going to look at Bitcoin as well. So it's a bit of a hybrid show. We do go through the news, we do have opinions, and we do have charts that we look at. So with all that being said, where are we? Market cap hasn't really moved. Volume is up just a touch. Bitcoin is still under 50% dominance, and Ethereum is still ticking away at 18%. So pretty much as we were yesterday. We had a run up. We're now back where we started from. So potentially we're going to see the same thing today. Beam is up. Remember, we gave away some Beam tokens last week. I think you should hold on to them a little bit longer, not financial advice. I have my own bag of Beam as well. Chiliz is doing okay. Render, Conflux, Woo, Asta. Chainlink is probably up based on the news that's come out about USDC. And Phantom, which I was a fan of, I'm not a fan of anymore. They are all up in the last 24 hours. And losers, not too many losers. I am not too bothered about a 5% retracement on SUI. It's up 100% in the last 30 days. I am now in profit on SUI. I bought SUI way back when at launch. I don't know what I paid for it. $1 maybe, 90 cents, something like that. SUI is up. A small retracement. Blur, small retracement. Aave is a different kettle of fish. Aave doesn't seem to have moved a great deal in the last 30 days. We need to look at that at some point. Celestia is having a retracement. If everybody's wondering why Celestia is on such a massive tear at the minute, it comes down to the simple fact that they have got airdrop season over on their chain. They're a new chain. They have a lot of new tokens which are going to be released. I will probably make a Celestia airdrop video, but they're on a bit of a tear. My price range for Celestia has been between about $12 and $16. So we've now broken out of that range. Again, when I do the airdrop video, maybe we will have a look at Celestia tomorrow on the stream. Audi is down just a tad. Arbitrum, Bitcoin, not many gainers, not many losers today. It's not something which I think Bitcoin is still shaping the future of crypto at the minute. There's an awful lot of anticipation on what's going to happen with Bitcoin, and we are going to go through that. We have got some tweets to go through, one of which I think I added late last night, was the inflows and the outflows. Now, first comment of the day is from Gabor. $300 million net inflows a day into Bitcoin ETFs means 7,000 Bitcoin a day taken off the market at current Bitcoin prices. Only 900 Bitcoin is mined every day. Now, this is more important than it sounds. That 900 Bitcoin that is being mined is going to become 450 Bitcoin from April. We are not going to see 7,000 Bitcoin a day taken off the market. That number is going to come down as the price goes up. But even if it halves and it goes to 3,500 Bitcoin a day being taken off the market, that is still going to be 8, 7, 8 times the amount of Bitcoin that is being put to the market. Because remember, the Bitcoin that's mined isn't all sent to exchanges. Some of it is held onto by the miners. Miners only sell what they need to keep their operations going. So potentially it is 8 or 9 times the amount of Bitcoin being produced and sent to exchanges is being taken off. It is a matter of time before we hit a huge shortage in supply and a massive demand. Think of it this way. In 100 days' time, at the current rate, 700,000 Bitcoin will be off exchanges. There's only 1.8 million Bitcoin on exchanges. So we will have lost 40% of the Bitcoin on exchanges within the next 3 months. So for all of you out there that might be worried a little bit about the price of Bitcoin, that might be worried a little bit about maybe we're not going to see, maybe this is the top. I've seen a load of people talking about $12,000, $25,000 Bitcoin. It's not going to happen. The amount of money coming in at $300 million a day, if the price of Bitcoin was to go to $22,000, then it would be 14,000 Bitcoin a day taken off the market, approximately. So the amount of cash coming in is just absorbing the amount of Bitcoin it can afford. If the price of Bitcoin goes to $80,000, there'll only be 3,500 Bitcoin a day being taken off exchanges. So there is now an excess of demand for Bitcoin, and it's going to take time for that to filter through. We were expecting the $50,000 last week. We didn't get it because Vanguard pulled the rug and Grayscale's Bitcoin was being redistributed to Coinbase and wherever else it might be. So don't panic. It's all still going to plan. We don't seem to be able to break below 42,000. That seems to be a great indicator of where we are in the market. Now, this next one I think is a chart. So this is the Bitcoin Kentucky Derby, it's been called. This is the $10 billion worth of ETFs being traded over the last 3 days. But I want to highlight something. It's not quite $10 billion of purchasing. If I make this big enough to fit on the screen, you will see that it's only $881 million, because you have to take out the Grayscale Bitcoin Trust. And the reason is, you look at the outflows in the top corner here. The outflows, which are just off screen. Let me make it a little bit smaller for you. There we go. So the outflows are of $580 billion coming out of Grayscale. That's because there are cheaper places to put your Bitcoin. And we can look at the $10 billion and say, oh, $10 billion has come into Bitcoin. No, it hasn't. The net income is 881 million. So it's $1 billion in the first few days, Thursday, Friday, and Monday. So 3 days, 881 billion, which is about the 881 million, which is about the 300 million that the other guy was talking about a second ago. So this number is going to rise. This is the important number. Total excluding Grayscale is the important number, because that's the amount of Bitcoin physically being removed from the market. And that's the number that over time we're going to see grow to be hopefully in excess of $1.2, $1.5 billion. Remember, it's the 3-day volume, so we don't want to, that's never going to hit 10 billion over a course of 3 days. So that's what we need to be looking at, and it's all good. It's all good. It's all positive. We've had a minor drawback simply because of the way the market reacted to being able to switch their Grayscale stocks to BlackRock, for example, and of course the fact that Vanguard tried to pull the rug on the entire. And longer term, like as I said by tomorrow we would start to see a pickup in Bitcoin, because that's a week after the ETF went live, and that gives people time. If they've withdrawn their funds in dollars from Vanguard, it's going to take a few days to send to their account, and then a few days more to send it to BlackRock. If that's the case, then Thursday, Friday this week, we should start to see a pickup. In my opinion, we should start to see a pickup towards the end of this week. And I do think $44,000 is on the cards. If it's not today, it will be tomorrow. If it's not tomorrow, it'll be Friday. We're going to break 44,000, and we could see a God candle any day. We don't know. We don't know. A little bit of bullish news coming out. The first blue chip company to buy Bitcoin, the first big billionaire to say that they've bought into the BlackRock ETF. Anything like that is going to start to pump the price, because now we have BlackRock on our side. We have Grayscale. Well, we've always had Grayscale, but we have Fidelity. We have traditional finance on our side now, and they were against us for years. Now we have them on side. Expect all of the news to turn bullish. So Arthur Hayes predicts a mega shift in Bitcoin price discovery. There he is, the man himself, talking about Bitcoin. We don't need to see a Harvey Nichols advert. Arthur Hayes, the co-founder of Exchange, has revealed the likelihood that Bitcoin price discovery will shift from east to west if the spot ETF product turns out to be successful. In a recent post, he highlighted crucial events that might likely trail the newly approved and launched spot Bitcoin ETF products in the US. He believes that success of the product in the long term will bring about the concentration of capital that might have a significant impact on the price of the asset. I mean, what we have to remember with a lot of these articles is they're not overly complicated, and they are stating the obvious. It's a little bit like saying the price of Bitcoin is going to go up after the halving. We know that because the amount of Bitcoin being produced is halved. That's why it's called the halving. So it's like stating the obvious, really. You know, the more people that buy Bitcoin, the more money that comes into Bitcoin, the higher the price is going to go. It's fairly obvious. It's fairly obvious, but it doesn't matter whether it's obvious or not. It's in the press, and that's the key. We want to see all of these traditional finance companies talking about Bitcoin on the TV. We need all the news articles in the Daily Mail, the Guardian, whatever, the Observer, whatever press is still about. We want to see all of this. However, he cast doubt on the true intentions of spot Bitcoin ETF promoters to adhere to the tenets of financial freedom enabled by Bitcoin. Again, I don't agree with this. I don't agree with this at all. We know why Bitcoin was produced. It was produced to be an inflation hedge. It was produced to be an answer to the inherent problems in the financial system. But he's and I think a lot of them are. Anybody in the world can go and download a MetaMask wallet. Anybody in the world can go and put money on it. Anybody in the world can go and buy crypto on a decentralized exchange. Anybody can go and download the Bitcoin Lightning app and buy Bitcoin. Anyone can do that. But not everybody has the capabilities to do that. So what the Bitcoin ETF does, in my opinion, is it opens Bitcoin up to people who don't have the capabilities to go and buy it themselves. They don't know how to use these exchange apps. They don't know how to use the exchange that you're currently watching us on. They simply get their wage, transfer $400 or $500 a month to their pension fund, and that's as much as they can do. Maybe they can do online banking. By not having a Bitcoin ETF, we are removing them from the ability to have Bitcoin. Think of it that way. Now, Bitcoin purists don't want traditional finance anywhere near it, and I get that. But you're excluding 5 billion people who don't have access to or have the understanding on how to buy Bitcoin. That's why it's so important that we get Bitcoin like Fidelity and BlackRock. They are not nicer than nice companies. They're horrible companies. They've been fined for committing awful crimes, but their fees are 0.25%, 0.15%, 0.2% a year. So for every $100 worth of Bitcoin you buy through them, you're paying 20 cents a year. So we can call them all we want, but their fees are incredibly low. That's why everyone's switching from Grayscale. Their fees are incredibly low. In his opinion, the cash creates model keeps the fiat used for buying shares in the investment asset in the US financial system, meaning there might be no visible benefits to users in the long run. No, I don't agree with that. It's a finite asset. As a staunch critic of the current financial system, he believes the best way to get exposure to Bitcoin remains to buy the coin directly. We know this, but it's not possible for people to do that. The emergence of the spot Bitcoin ETF will benefit traders who can easily identify the arbitrage opportunities that will emerge from the price difference in Asia and the West. Yeah, that's fine, but we're talking about bringing Bitcoin to the world. We're not talking about a few traders making a few pounds here or there. Get with the script. Miss opportunities for people to buy Bitcoin as humanly possible. Right, let me move on. Before I do, I'm going to drop a box. I can't read too many messages because of all the spam in chat. It's great to see so much spam. Giveaway bot. Why is there something called giveaway bot in my chat? Seriously? Well, we'll try and get you banned. I can't read any messages from anybody. Simply because it's flooded. So what I'm going to do, I am going to drop a comment to Winbox. And then we'll carry on. I'm going to go over the Bitcoin price very briefly to give you an idea of where we are and where I think we can go. And I've got two targets for Bitcoin. One based on the very, very bearish scenario that could be around the corner, and one on where I think we should be looking at going. But before I do, let's drop the box. Or envelope, or whatever it's called. Box, envelope, the red thing that appears on your screen. There we go. Now remember, when you claim that, do us all a favour. We are not sponsored by anybody. Everything that we pay you comes out of our pocket. So because of that, all we'd like you to do is follow, like, and subscribe to the channel. That's all we really want. It's important that we help to grow our numbers, because by getting bigger, we get sponsors, we can do giveaways, all those kind of good, nice things. So if you can help us out, that would be great. Now, Bitcoin, let's go and have a look at the daily chart, which is the one I tend to look at more than anything else. And as we can see, Bitcoin, or should I say Brogan, has a completely different set of visuals than I do. So where are we on Bitcoin? We are in this lovely pattern that we broke into on the 4th of December. And since then, we have been playing around in this level. I'm ignoring this bit here. Get that out of the way. I'm ignoring this here because this was the spot ETF launch. So let's ignore that for now. We're in this pattern and channel pattern, whatever you want to call it, and we are moving up slightly. Now, the two scenarios. Why does my bull market support band keep getting removed? Here we go. So, Ben Cowan, last night, I watched Ben Cowan a lot. For those of you who don't know who Ben Cowan is, he's a very level-headed, I'm going to call him a Bitcoin maxi, but he's not. He talks about how Bitcoin is the best investment for most times of the market. He is predicting a breakdown in Bitcoin and has used previous cycles to explain that before the Bitcoin halving, Bitcoin always retests the bull market support band. And I covered this yesterday on the stream. I think we're at 37,000 right now. So 37,000 is where the bull market support band is right now. That's where he thinks we are going to retest between now and the end of February, which is about 6 weeks. Now, before you all panic, thinking we're going to drop to 37,000 today, this bull market support band, remember, it's moving up like this, okay? And it might even cross at some point here. So what could happen in a very bearish scenario is we could come back up to 44,000 a couple of times and fail a couple of times because there's just not enough money coming in to push us up. And what could happen is we could come down here and retest this bull market support band 40,500 in 3 weeks time. So we could come down and retest 40,500 before then moving up. That's one scenario. The second scenario is very simply, we have so much buying at the moment that every sell-off is being bought up. We saw it yesterday I'm not going to go too far down, but we did see some wicks down. Was it yesterday? Tuesday. Here we go. So if you look at yesterday, come on, let's get rid of that. Okay, so we've seen a couple of retests of this line. Now, if this line wasn't here, you would be wondering why we keep bouncing off the middle of nowhere. And it's because we have this nice little channel now that we're in. So we're retesting it, and the bottom of this is currently at 41.9. So my belief is that today we are going to see another move up, and I think we're going to see this kind of action today, and I think we're going to have another crack at 44,000 today. That's what I think is going to happen. We saw yesterday during the day, when we've got two periods of time now. We've got when the markets are open, and we've got when the markets are closed. When the markets were open yesterday, we could see the price of Bitcoin going up. That was an indication to me that these ETFs are starting to accumulate the Bitcoin. But then what happened was after hours, the price started to drop, which indicates to me that it's a sell-off by non-ETF related funds. So if you look here, we topped out at about 43.5, and then all this period of time down here, all of this action is after the ETFs have closed. So the price has moved up to here when the ETFs are open, and down to here when the ETFs are closed. So what would likely happen today is we see that. And then, of course, ETFs close, we might see that again. So we could see something like that happen. But I'm not predicting 37,000 today, tomorrow. I think that could happen between now and the end of February, maybe the middle of February, whatever it might be. And I think we'll retest it above 40,000. I'm finding it very difficult to see a way that we break below 40,000, given that we now have this $300 million a day worth of Bitcoin being bought. And yeah, it's not going to stay like that forever. It will fall off over time. But it's not going to fall off today, tomorrow, or next week. It might fall off by the summer when everybody's on holiday, the traders go on holiday, the trading comes down. So if we do break up and we retest 44,000 today, where could we go to next? Well, we have this upper range up here, which is currently at 46,000. Now 46,000, 45,600, whatever you want to call it. If we put a line in here at around there, so it's 45,900. That's the next target for me. So if we can break 44, 46 is next. And don't forget this line up here. This is my medium-term target for Bitcoin, which is 52,000. And again, we keep saying this. People are predicting downward action. People are predicting 12,000. How can we go to 12,000 when there's an additional $300 million a day of Bitcoin being bought? In a week, that's 1.5 billion. In a month, that's $6 billion of Bitcoin being bought up every month. So I can't see it now. Now, normally what happens is, it's a little bit like Jim Cramer. It's inverse Jim Cramer. When the markets are, where we are, we're kind of crabbing. And there are people who've said, for example, there are people who have said that this is one of these, for example. And if you move that down, that would bring us to 39,000. There are people who are saying that, but there's too much buying pressure for me at the minute. And when the markets open today, and when we see more daily markets with the ETF being involved, we're going to have a better idea of where we're going to go. But for me, 44,000, we've got to have a crack at 44,000 today. Have to. Now, let's move on very quickly. And this is probably one of the most ridiculous articles I have read. And that is to do with ADA being useless. Apparently so. Can I see anything in chat? James, welcome back to the stream. Nice to see you again. I can see you. James J. Hopefully it's not James J. Remember, wherever you are, whatever you're doing, the spam seems to have stopped, which is nice. So drop a comment for an hour. It is nice to have a conversation with people. So any questions you've got, ask them below, and I will try and catch them in the chat as best I can anyway. Right, let's have a quick look. So research has stated that Cardano is useless. Unbelievable. In a bold retort to a critical report, that is a mouthful and a half. The founder of Cardano downplayed the research's firm's credibility. The firm tried to allege that Cardano's native token is useless. I can't wait to read this. The report asserts that a smart contract network's native token requires substantial use to hold any value. They don't get it. However, the firm claims ADA lacks such utility or a credible path towards achieving it. Analysts at the research highlight the absence of proof of ADA's utilization beyond exchange transfers. They also allege artificial activity by holders. Nonsense. A pointed critique involves the stablecoin market on Cardano. In contrast to other networks where stablecoins like USDT or USDC dominate, Cardano appears to have a limited presence. In this regard, it features only 20 million Cardano collateralized stablecoins valued below $1. There is nothing else going on the Cardano network other than exchange transfers and a group of backholders fabricating blockchain activity. There is no outside proof of anything going on. It is only the blockchain data and trading on exchanges, not a single USDT or USDC in the Cardano network. Network stablecoin value relative to market cap: Cardano 0, Ethereum 25%, Solana 5, Avalanche 9. The firm further projects a bleak future for Cardano. Believes that Cardano will fall into irrelevance despite initial hype, similar to IOTA, NEO, and EOS. In response, who never heard of them? Stance eschewing a direct rebuttal to the specific points raised. Raises questions about the network's future trajectory and its ability to address valid concerns. Now, first of all, there's a couple of points I want to raise on this. Solana was attached to Sam Bankman-Fried, which was attached to the collapse of FTX. The price crashed. Nobody wanted to develop on Solana. It got kicked when it was down. It got called. Every time somebody said the word Solana, people laughed. Haha, Solana. You've not got Solana, have you? Solana's dead. Solana's a waste of time. Solana's going to zero. Solana is nothing. Okay? For an entire year, the Solana community were called, talked down to, embarrassed and humiliated. And do you know what they did? They built. They stuck together. They produced projects. They built a meme culture. The NFT market is burgeoning. And guess what? They've come out the other end, and we've got people like CryptoZaros saying Solana is going to overtake Ethereum in the next bull run. Why? Because that goddamn community did not give up on the project. Now, if you think Solana's community is strong, look at the Cardano community. You have to remember one thing. Solana started later in the game than most. It had already built its DeFi, its NFT, its transactions, its TPS was massive. It was already there. Yes, it's got flaws. Yes, it's been rebooted. Yes, the nodes talk to each other on chain, which makes it look like there's loads of transactions. We know all of that stuff. Everything has flaws. Bitcoin, Ethereum, Cardano, Solana. Nothing out there is perfect. No matter what anybody tells you, no chain is perfect. Now, we covered proof of work versus proof of stake yesterday. proof of work, the biggest proof of work network, the greatest, most secure computer network ever built is Bitcoin. And it's proof of work. It's unhackable. It's unbreakable. Okay? Look at proof of stake. What is proof of stake? Decentralization, using the coins to validate the blocks. Those coins are ADA tokens. Cardano is one of the most decentralized, if not the most decentralized proof of stake blockchain in the world. Ethereum and Vitalik himself admit that Cardano has the best proof of stake system in the world. We've talked about Cardano being used to stake to help other chains in their validation. We've talked about Cardano being connected to layer 2s on Ethereum to allow Cardano users to play Ethereum games. We've talked about the fact that the DeFi platform is only a year old. We've talked about the NFT projects growing in value. We've talked about SNEC and Bank, the meme coins that are on the Cardano network. So for some clown of a company to turn around and say that Cardano is useless when it's ahead, light years ahead of other companies in terms of proof of stake, but it's also behind and playing catch up in others because it's not perfect. He built it to last. So if anybody tells you Cardano is useless, that's like saying the greatest proof of stake blockchain in the world is useless. Well, if it's that useless, why has Ethereum switched to proof of stake? Because proof of stake is what it's all about. Decentralization and using that decentralization to create a secure chain. And Cardano has its faults, as Solana does, as Ethereum does, but it's not useless. I mean, come on, it's not useless. By the end of this year, it could be connected to Ethereum via layer 2s. It could have what would you call it? Second chain validation. What does that mean? That means if you have 1,000 Cardano and you stake it with Cardano, you might have the ability to choose a second token as a reward. Let's say Solana. You stake your Cardano and you earn your Cardano rewards, which are 2 or 3% a year. And in addition, you choose another blockchain to help secure. So you choose Solana is the first one that came to mind. So you choose Solana. And guess what? You're getting double the rewards. But the point of proof of stake is to help validate and secure the chain. That's the point of it. These native tokens are the oil that keep the entire blockchain moving. Ethereum, ETH has gas fees. Cardano has its own gas fees. Every transaction on Solana, on Bitcoin, on Cardano, they all have gas fees, activity. Just because Cardano is staked to the hilt does not make it useless. Absolute clown, this article. Good morning, Michael Johnson. Hope you're doing well. Hope you are doing well. So what we're going to do is we're going to look at this in inverted speech marks useless coin, which is Cardano, and we're going to see where the price action is. Nice to see the bots are back in chat over here. Is the SAY price going to come down? I don't think so. No, I think SAY is going to go on a run. And the reason being is there's two coins that are going to keep pumping in the short term. And that is SEI, S-E-I, and the other one I'm about to do a review on, Celestia. Now, Celestia's price action is not based on the token or the project. If you have been watching me in the past, I have been telling you to take profits on Celestia simply because the price action moved 10x, and you always take some profits on it. Now, the reason SEI and the reason that Celestia are going to keep pumping is that their new projects and the buzz thing to do at the minute is to do airdrops for all the tokens that are going to be released on their two respective chains. And I've already made a video about SEI, which is over on a different platform that I'm not going to mention the name of. I've already made a video about SEI. I'm probably going to make a video about Celestia. You can go and stake Say or Celestia, and you can stake them and earn from the new airdrops that are going to be happening on those chains. Now, the question you have to ask yourself is, are those tokens that you're going to be airdropped, are they going to be worth anything? I don't know. I don't think they're going to be worth as much as people make out. I've seen some videos that have said, spend half an hour doing this and you'll make $10,000. I don't think. Nothing in life is that simple. If you ever see anything that looks too good to be true, it's too good to be true. It really is. And what you've got to understand is there's no real free money in crypto. Yes, you can earn retrospective airdrops. Yes, you can earn from when there's hard forks in tokens. Yes, all of that happens. But it's not as if it was as easy as spend half an hour and get $10,000 and 50,000 people did that. How are you going to generate that amount of cash? I'm new to crypto but excited about the halving coming up. Can you please help me understand what an airdrop means? So an airdrop is a very good question, actually. I'll answer it now because it helps MK Storm. So what happens is, let's take Solana. Solana has had 2 major airdrops. An airdrop happens when there is a new project, or in this case, existing projects, Pyth and Jupiter, existing projects which have been built up over a period of the last 2 years. And it gets to the point where they want to create their own token. In this instance, it was Pyth. So Pyth token. What you don't want to do when you have a project is you don't want 95% of your tokens to be held by a wallet. So how do you get decentralization and activity for your token? There's a few ways to do it. You can give it away in rewards on liquidity pools, for example. You can give it away through launch pools. So both of the exchanges I'm streaming on now both have launch pools. You can give it away there, or you can do an airdrop. You know which previous wallet addresses have interacted with your project. So for Pyth or for Jupiter, you'll see who's traded on your platform, who's used your platform. You might have 10,000 wallets. Now, if you've got 100 million tokens, you really want to be getting about 50 million of those tokens given away. You want them given away to the community so you can decentralize your project. So an airdrop happens in 2 ways. One, it's automatically sent to your wallet. That's why it's called an airdrop. It's dropped out of thin air. This used to happen an awful lot in the past, then it went away, and now it's the buzzword again. So, for example, Ponk did an NFT giveaway where if you minted an NFT, they would airdrop you some of their tokens. And what happened was you minted the NFT, they got your wallet address, and then 5 days ago you were airdropped some Ponk tokens to your wallet. You didn't have to do anything. That's the first way of doing it. The second isn't really an airdrop, it's more of a claim. And they'll have a website and they'll say, put your wallet address in here. You can put your wallet address in and it will say, you are authorized, or you are allowed to get 1,000 tokens. Do you want to claim them now? Yes. And then you will transfer those 1,000 tokens to your wallet. So an airdrop can work in 2 ways. One, it's just sent immediately to your wallet. And 2, you claim it from a website. They're the 2 ways to get an airdrop. Most airdrops, on Solana anyway, are retrospective. They're based on activity that you've done in the past. With Say and with Celestia, these are new tokens on new blockchains. So they have to build up a community and activity. So you have to go and perform some various tasks on their chain. You know, create a wallet, stake some tokens here, trade here, whatever it might be, just to create some activity. And then in 6 months' time or 3 months' time, they will then airdrop you their token on that blockchain. So if you've got a Kepler wallet, for example, then you might be sent the various airdrops from Celestia, for example. So there's multiple ways to get airdrops. And I've made a video about how to get started on Say, and I'm going to make a video on how to get started on Celestia. Because what you have to understand, even though you're on an exchange, and even though we're not going to talk about the tokens which are not listed on those exchanges, you've got to remember that Bonk was a meme coin that I covered a year ago. And that coin wasn't listed on exchanges, but now it's on both of the platforms that I'm streaming on. So just think about what you want to gain. So Solana is a great place to get airdrops from. Go and check out go and check out Celestia. Some of the people will say it doesn't cost you anything. In some instances it does. It might cost you $100, but it doesn't cost you $100. You have to buy $100 of that token to go and stake it to earn the rewards. For example, there is a new moneymaker called Prism, which is going to do all of the different Cosmos chains. If you stake your tokens with them as a validator, they will airdrop you their token. So you still need to own the Luna to do that, or you still need to own the Celestia to do that. That's some of them. Others, free airdrops. So go and check it out. It's worth doing, and it's worth doing because it's good experience. These airdrops aren't going to last forever, and in 5 or 10 years time you'll be able to say, you know, I got 1,000 SIA tokens airdropped to me in 2024, and they're now worth $100,000. There's always that chance it happens. 99 times out of 100 they won't be worth a great deal, but there will be one that will fly, and I don't know which one that is. If I did, I'd be a millionaire. Now let's talk about this useless token, which is ADA. ADA has followed this beautiful path since October last year. Let's put it on probably a higher time frame chart. There we go. So this useless token, which I was telling everybody to buy from 25 to 30 cents, is now sitting at 53 cents. Yes, it went as high as 65 cents and it has had a retracement, but it has honored this line beautifully. We've come up, we've broken down, we've come up. We are still above the bull market support band. The bull market support band is now sitting at 42 cents. So 42 cents is where the bull market support band is. Had you bought at 24 cents when I was telling you, you'd have doubled your money plus some since then, and that was only in October. In fact, I've been talking about it probably since I bought my second bag of ADA here in January for a different project that I'm doing. But I'm expecting a move up in ADA, and I would expect it to retest this level here at 60 cents. If we break down from 53 cents and we get anywhere near 45 cents, I would say buy. If we get down to 36 cents, I would throw your kitchen sink at it. Because ADA, for me, when you get the coin that is being slated by everybody and it still can't bring the price down, Bitcoin's a good example. Bitcoin is being lauded as the next best thing, but then traditional finance is now stuck, not able to deal with it in some instances. It's getting bad press from some sides, and we're having an argument about it. Once everybody's on side on Bitcoin, it's going to fly. Once everybody understands the value of Cardano, it's going to fly. I'm not saying it's going to go to $20, $30, $40. I'm going to say it could go to $3, $4, $5. I'm not over-egging Cardano, but I'm excited at the possibility of what's coming for Cardano. I'm more excited about Cardano than I am Solana, because I think Solana's already had a massive run. And even if it goes to, you know, $300, $400, that's only a 3 or 4x from here. Whereas Cardano could potentially do a 6 to 10x from here. And bearing in mind, if you look at where they are in the charts, where are we? Let's go to market cap. So Solana is at 44 billion. If it 5x's, it would go to 220 billion. That's a serious market cap for Solana. Cardano is only at 18. If Cardano 10x'd, it would go to 180 billion. I think both of those are very achievable in the next bull run. I wouldn't be saying, for example, Aptos at 3 billion. I'm not going to say Aptos is going to go to 150 billion. You got to look at comparisons to where these coins are going to move to. If we are talking about $160,000 Bitcoin, that's a 4x. That gives it a $3.2 trillion market cap. The alts are going to follow, and the money's going to come out of Bitcoin and go into the alts. So if you think 3.2 trillion, we're only going to add 100 billion onto Cardano. That is easily doable. So don't hate Cardano the same way I tell you to don't hate Matic. Matic for me is still the number one layer 2. It's still the number one layer 2. No matter what Optimism and Avalanche do, it's not Avalanche, what's it called? Begins with an A. I talk about it all the time. I've forgotten the flaming name of it now. Not Algorand. What's it called? Anyway, whichever one it is, it's still for me the number one layer 2 on Ethereum, and that's not going to change. Now, another coin I am massively bullish on, and for full disclosure, I own a bag of this, and that is Chainlink. There's a lot of people being very moody about Chainlink at the minute, and that is because Chainlink is doing a lot of feasibility studies, and people are not seeing that Chainlink being put into real world projects as much as they want them to do. So last week or the week before, Chainlink is looking into a feasibility study with, I think it's someone like Vodafone. I might be wrong on that. But Chainlink is going to be, I wouldn't call it the glue that binds everything together, but it's not far off. So doing deals with USDC and USDT is a smart move, because we both know USDC and USDT are both going to be around for a very long time. They've both survived the bear market. TUSD got depegged a few days ago, so that might not be here any longer. BUSD was got rid of by the American government. Pi USD, which is the PayPal stablecoin, not too big. Don't fade Chainlink just because it hasn't given everybody everything. If Chainlink had given everybody everything it wanted all at once, it'd be at $100. It'd be a top 10 coin. It takes an awful lot of time. These things, traditional companies do things in years, not weeks. And people in crypto have got to understand, yes, we can create a blockchain in a week, and we can add tokens to it, and we can be up and live in a month. I get all that. Traditional doesn't work like that, unfortunately. So, Chainlink has announced the latest collab with Circle, integrating the latter's cross-chain transfer protocol, CCTP, not to be confused with the CCP, into the CCIP. This partnership marks a pivotal step in enhancing the fluidity of USDC stablecoin transfers across various blockchain networks. What is USDC trying to do? USDC is trying to create a replica of the banking system on blockchains, and the absolute number one nailed on key to make crypto work in the future is to have interoperability across blockchains for everything. NFTs, money, even proof of stake validation, all has to be interoperable. At the minute, we have got 15 or 16 different spiders webs on the wall, and they don't really talk to each other. Now, if you connect all those spiders webs together, you have the network effect. And the network effect, for those of you that don't know, just means bigger than the sum of its parts. And Chainlink is what is going to allow that to happen. So integration focuses on using USDC, a popular stablecoin, across diverse blockchain platforms. It opens new avenues in payments and decentralized finance. Sergey Nazarov, the co-founder of Chainlink, expressed enthusiasm about it. TP offers a standardized bridging protocol. This protocol facilitates the transfer of native USDC by burning and minting the stablecoin between supported networks. This supports Arbitrum. Arbitrum! That's the layer 2. There is a... Michael, don't worry about asking questions. Listen, you ask as many questions as you want. I will get to them. It really isn't an issue. It really isn't an issue. It's, you know what? The worst thing that you can do to anybody that's new to crypto is put them off. If you're overweight and you go to the gym, or you're really skinny and you go to the gym, what you don't want to do the first day you walk into that gym is be ignored or laughed at or shunned, because you'll never go to the gym again. You go to a new pub or a new restaurant or a new bar and the staff are horrible to you, you'll never go back. When people come to crypto, we have to be nice to them, because that one person who doesn't know anything about crypto today, in 2 years' time, could be giving talks at work or at his school or at his college about how crypto is going to help people. So everybody that comes to crypto can become an advocate of crypto. So there's never going to be a stupid question asked on this channel. Nobody's ever going to be made to feel small for asking a question. So we'll get to your question when I've got to the end of this article. So this means USDC will flow through all of these different layer 2s, layer 1s, and we need this. This is what's needed. And why is it needed? Because at the minute, with various different transfers between blockchains, you get these hacks. Mainly the North Koreans hack, and that's an issue, because you can't trust that the coins that you mint and move from one blockchain to another are ever going to arrive. So there's vulnerabilities in the blockchain. Chainlink is going to get rid of a lot of those vulnerabilities, and USDC is the most important thing. We talk about liquidity as well quite a lot. Ethereum has the most liquidity of all the blockchains. Cardano hardly has any liquidity, because the mindset of people on Ethereum is swap to stables. The ideology of people on Cardano and Solana is swap to Sol. Perfect example is when people sold their Pi airdrop, they bought Sol with it. When people sell their Bored Apes, the majority of them, not all of them, the majority of them will swap to either a different blockchain or USDC. Some keep them in Ethereum, yes, not all. But the mindset is to swap to fiat on Ethereum. The mindset set on Cardano and Solana is to swap to the native token. So when the guy was saying it's useless, it's nonsense. If I send 1,000 Cardano to an NFT marketplace, I'm never going to take it out of Cardano. It's going to stay in Cardano, because that's the currency of that blockchain. Ethereum is a bigger blockchain, and that's why USDC and USDT are the currency of Ethereum. So for me, massively bullish news. Absolutely, this is going to tear Link up to new all-time highs. But again, it's not sexy. It's not a sexy token, and that's an issue, because if Cardano and Link and Matic are seen as not sexy, the price action will recognize that, and all the money will come to Solana. If you'd have said 12 months ago to an average person, can you name me 3 cryptocurrencies, they would say Bitcoin, Ethereum and XRP, because they're in the news. If you ask them today, I imagine that they would say Bitcoin, Ethereum, probably Solana and XRP. That's 4, forgive me. But that's because Solana has now got this phone, it's got all of this stuff going on. Anyway, before we get onto the chart, the question is, from watching, I'm seeing an ETF or trust that use underlying coins multiply. So what happens is the Bitcoin ETF is not priced in Bitcoin. It's priced in the share of the Bitcoin. So they have, let's say they have 1 Bitcoin, and that Bitcoin is worth $45,000. They will divide that into 1,000 shares. Each share will be $45. So even though that $45, you own it and that's your share, you know that the underlying asset is sitting in a vault somewhere. So you own the underlying asset. What the SEC did when they came in and they said, right, Even though that person owns the underlying asset, when they sell their share, you have to pay them in US dollars because that makes it a taxable event. And that's what most people missed. So you buy the ETF at $45, you sell it at $50, you are taxed on that $5. What the SEC have stopped you from doing is redeeming your $50 for $50 worth of Bitcoin to create the taxable event. So Mr. American, what are they called them? The IRS can get their tax. That's what they did. So you don't physically buy the underlying asset when you buy the ETF. You buy the share that they have decided. And could they increase the number of shares? Absolutely, yes, they could. They could do that. But you're always going to hold the amount of Bitcoin that that share represents. So if they mint 1 million more shares, they will buy 1 million times the value of that Bitcoin. So you're not going to end up being devalued by holding their shares. Now, Chainlink, it broke up. It was at this 7-cent range in October. Like everything else, it broke up. And we came into this channel. And again, Chainlink loves to do this. Okay? Chainlink loves this. We can go all the way back to here. And I've drawn this chart many times. This is Chainlink. It loves that pattern. Okay? And now we're up and touch $17.50. Are we going to break it this time? All depends on Bitcoin for me. We could do this again, and that wouldn't surprise me. But Chainlink should be in everybody's portfolio. You should own some Chainlink. In my opinion, not financial advice. I own Chainlink. I like it as a token. It's done exceptionally well for me. I bought Chainlink back in January, which was probably about here. So Chainlink for me is good. In the short term, if you're looking for a price to get into Chainlink, anything around the bottom of this white line, which is $14.50. If it breaks down, see, again, I like multiple convergences. So we've got the fib level and the bull market band there. That's at 12.50. If you see a 12.50 link, you should be buying it, in my opinion. All-time high, I think we've talked about this before, all-time high of Bitcoin, of Link is, I keep forgetting, is it $60? $53 or $52, something. Do I think it's going to hit $100 in this cycle? I do. I do think this is going to do a 7x, 7.5x, 8x. I think it is going to do that because it's going to be one of those tokens like Quant. I'm a big fan of Quant. Limited supply. Again, it's like the glue for the banking system. XRP, Quant. Quant doesn't get any recognition, to be fair. But I'm not as bullish on Quant as I am on Chainlink. I think Chainlink, if Chainlink stays in this pattern for the next few weeks, good. Let it build a level of support. And, you know, maybe we will look back on Chainlink and say anything under $20 was a steal in 2 years' time. But don't fade Link. Links are always going to be around. Now, we are so far behind that I'm not going to do the last two articles. What I'm going to do is I'm going to move on with the quiz because we're an hour in and we've only done 4 things. So basically, I'll very quickly cover them for you. Solana has a mobile phone. It's sold out. People did airdrops to it. The phone actually ended up giving you $300 every time you bought the phone. There's going to be a version 2 dropped in 2025. It's $450. I'm not going to buy one, but $450 is very good for a phone that's going to be airdropped to. So it might not actually ever cost you $450. It might cost you a lot less. So just stick to your mobile phone. If you want to buy a Solana mobile phone, go and look it up. Thank you for the nice comment, Michael. I hope you have enjoyed it. I hope you've enjoyed it indeed. 14,000 dead tokens. Let's bring this up. Again, we're running out of time. We are running out of time. But it's been nicer today than normal. There are 14,039 tokens listed on CoinGecko since 2014, which are now dead. 50% of all the crypto assets listed on the platform. Most failed projects being listed during bull runs. This is what you need to be careful of. So it's more of a warning. In the bull run, we're going to see new tokens come out of nowhere. We're going to see things you've never heard of. You're going to see coins and you're going to think to yourself, why is Mike and Brogan, why have they never mentioned those tokens to us? And the reason is that we're going to enter a hysteria period, which might be towards the end of this year, might be beginning of next year. We're going to enter the hysteria phase. And the hysteria phase is where anybody will make a token and it will run up to $100 million market cap. And people make money out of that. And we're not there yet. We're not at the hysteria phase yet. But this is why you pack your bags for the bull run now. This is why you pack your bags of Matic, of Cardano, of Ethereum, of Bitcoin. You pack them now. Now what's going to happen is we're all going to get that little green-eyed monster inside us, and we're all going to want to gamble on some of these new tokens that come up. And that's good. That's the kind of thing you should do. But what you should do is you should take $50, $100, $150, whatever it is, whatever small amount, might be $10, whatever small amount you've got, put that to one side, and that's your FOMO bag. And that's your bag that you're going to buy all of these tokens which are going to go to zero with. Because what you don't want to do is you don't want to sell your Cardano or your XRP or your Solana or your BNB. You don't want to be selling that to buy some coin that's been around for 5 minutes, because it's going to pump and then it's going to dump. And if you don't hear about it in time and it pumps and you catch the top, the coin's going to lose 99% of its value and you're going to be broke. So put some money aside to lose. That's what you need to do. You don't want to be gambling your real currencies in the bull run when everyone's running around. And don't get me wrong, we are going to highlight projects on here that we think are going to be brilliant. And we are going to do that. We do that with some meme coins that we like. We do cover them. There will be some projects that come out in this bull run that are worth looking at. But what I'm saying is, don't sell what you've worked 2 years to get. Don't sell it at the drop of a pin to go and buy a token that's been around for 5 minutes. There's going to be things that we don't expect. You know, maybe WAGMI makes it, which I don't think it will, but maybe WAGMI makes it. Maybe Big Time Gaming makes it. Maybe Gala goes to $1 tomorrow. We should have been buying Gala at 2 cents, not at $1. That's the thing to bear in mind. You can't own every token. You've got to get that mentality out of your head. You pick your tokens, you stick with them. That's your cards. You hold those cards. And at the end of the bull run, you sell up, you take all of that money, that life-changing wealth that you've spent 4 years building up to, and you sell it. And then you sit on the side and you wait for 18 months, 12 months for the market to correct, and then you come back in and then you assess what new tokens have come out of the previous bull run. What should you start to dollar cost average in? That should be the mentality. Don't go into it thinking, I'm going to 1000x next year because I'm going to go and buy all these tokens. Well, you've done all the hard part now. Why are you going to go and blow it next year on a load of coins that might not exist? So 50% of CoinGecko tokens do not exist anymore. 50%. So you have a 50-50 chance of just having it exist. And then of that 50% that do exist, you might have a 1% chance of it taking off. Nobody saw Solana, and that came out of nowhere. And people were buying Solana at whatever price. Ethereum, way back when, was 10 cents, 20 cents. Matic was 1 cent. So it can be done. You can 70, 80x money, but don't expect it, or don't expect to sell everything and take it from there. So what we're going to do now is I'm going to say goodbye to one of our platforms, and when I come back, we're going to do the quiz. So just bear with me. If you are new here, please subscribe. Please like, please do all the things. We'll be back tomorrow at 11 o'clock. But for now, I'm going to get rid of one of the platforms, and when I come back, I'm going to